Hello again, it's Niall at learntotradethemarket.com bringing you another quality trading setup video. I'd like to draw your attention to the Euro US dollar FX pair. Looking at a Fakey setup again. Most of you guys who follow the videos should be aware of what the Fakey setup is. For those of you who don't follow actively, I'm going to demonstrate exactly how to trade the Fakey, what to look for prior to an entry. Now, the simplest way to define a Fakey is an inside bar breakout that fails. Now an inside bar looks like this. We have an outside bar, we then have a bar that is within the high and the low of the outside bar. So that's the inside bar. The breakout would be a move to the downside or to the upside of this bar. Okay? So breakout either way is what we'd be trading. If we're trading a trend that's down, we'll short a breakdown. If the trend is up, we'll buy on stop on a break above the highs. Now the idea with the Fakey is it's an anticipatory technique for a reversal and a short or long ambush. Now what I mean by an ambush is the institutions know where your stop loss is in the market, and if most people are going long in an uptrend and they take this breakout here, more than likely you will get a reversal either the next day or during the session that comes straight back down, stops everyone out. And that's a common thing in the Forex market because most people are trained to buy a breakout, and the professionals actually sell in to a breakout. It's a professional strategy, and that's what we're looking to do at Learn to Trade the Market, is trade professional strategies that have high probability of trading a reversal and getting caught in that vacuum of stop orders and liquidation that occurs so often. And most of the time they come from a bearish reversal or a bullish reversal against the trend, and that will usually be by a spike high, and I'm going to show you what the spike high is now. When we have these upper tails on the candles like so, sorry, lower tails, upper tail here, that's a bearish exhaustion, and it's also a false break. If you can see here, the market tried to break out and it's just failed. So the strategy for an entry would be to go long on the break. Okay, if that's your strategy for breakout trading on the weekly time frame, we could take a long as the week's upwards. Okay, it's open and moved up, so we could trade in that momentum, or we could wait for the Fakey setup. Now, I personally did take a long. Okay, it broke out, and then the market came back, and I got stopped out at break even. I then switched to shorts, and I'll show you why. Once the market came back, moved up, came back, and once it started to move below the open, I got short because I knew that this was a false break. So I short sold, and then the market has proceeded to move low, and I'd be looking, you always look for a minimum test of the previous lows, and we've got these two lows here as our initial target. Okay, so we're short here, we're looking for a target. Now our stop loss is above the high. That's our stop loss. Or you can make it a little bit tighter, and the important thing is you're going with all the stop losses in the market now, because if people have gone long, they're stopping out, and because the primary trend is actually down, it's got a high probability of success because this swing was down. Okay, coming from last week, we've come down, up. Now this could be the termination point for that new leg down, and that's what we're looking for. Now to manage this trade, we could take profits here at the target point here, or we could move to break even. Once the market touches this next support level, we could move to break even stops and let it run into the end of the week. And that's how you trade the Fakey setup. Hopefully you've all learned something today. If you've got any questions, post in the forum on learntotradethemarket.com or send an email through the contact us section on the Learn to Trade the Market website. Thanks for listening. Good trading.